Good morning, good morning. Hey, Moran. Good morning, how are you? Welcome to all the folks on YouTube. Hey, Ben. Good to see you again. Hey, Tim. Everyone's awake? Yeah, he's, it's a little harder in the summertime. I'm good, I'm good. All good here. Hey, Raj, how are you? Oh, boy. Okay. So, let's get to it. Yeah, it's a little slow, right? A little slow. Let's go take a look at yesterday. It had almost a P-shaped profile, and you have, once again, if you look at what we call the value area, which is a fancy way of saying cost basis. Now, every trader should know what a cost basis is, right? If you don't know what a cost basis is, we really need to teach you. You buy one share of stock at $1, another one at 2, your cost basis is $1.50 on 2 shares, okay? Hey, Leslie, how are you? So you need to understand what cost basis is because markets are about taking product and selling them that product for profit. And when the market runs out of buyers, puts it on sale, right? Pretty simple stuff, okay? So market profile traders will say the value has been overlapping to higher for the last few days, right? We have short positions here that just as soon as we came down there yesterday, we found some buying, rotated back up. The overnight inventory now is short. I'd say it's about 70% short. Most of the trading is underneath yesterday's close, right? We did a look above and fail of yesterday's high. And right now what we're doing is we're trying to find the bid. So if you look at the bottom of the cost basis, you'll notice that we came into there and just dipped in and came back up. So let's see what happens as London and Europe, those European markets start to trade more and London starts to open. Let's see if we can get down here and into this area right here, which is an area where there's a short position. And I'll show you on the next chart. The other thing is there's a short position here and there's a short position under 59.40. That is the base, and that's where the bids were in all yesterday after this extension down. So this is an area that's of interest to us if we can get down there. So I went and I drew my balance zones, 59.64 half to 68 quarter, double it to the downside to 57, and then you double it 4 times down. These are just discount zones. So we've done a look below and fail, a look below and fail of 57 twice now. So the market, you can see, right at that 56, 55 area here, those are those bids that we were talking about here. That's where they are on a 1 minute chart. You can see it. So whether you're using candles or TPO or whatever you're using, you can use the lows to show you where the bids are coming in. And if you have enough short covering, you see how we had single prints to the downside? Well, we went into those single prints to grab supply. Now there's only 2 left, which means we ran out of supply underneath 61, and the market went up into the 61s to grab that supply. That's really how you should be looking at charts. When you look at a chart, you should say, you know what? Under 57, there's nothing for sale, right? Under 55, there's definitely nothing for sale. So the market will rotate up to a place where the sellers are, which is up at 63. That's why you see the market getting hit with resistance at that level. So how do you use that? Remember what we said a couple of weeks ago, right? If we're going to look at information, that information has to be useful in retail trading. So how do we use that information? Say we had gone long at 58, right? When it looked below and came back up, and we bought 58, put our stop underneath 57, right? So tactically we know that 60 is the first place that we're going to be selling. And you have a couple of more contracts, you know that they're going to be sellers at 63. So if you're long at 58, you're going to want to sell that position before 63. Why? Because everybody else is and they're pushing the price down. So you don't want to be caught with a product that you can't sell, right? I mean, think about it in business. Do you want to buy something that you can't sell? You don't, right? Because it ties up your capital, right? So once we start thinking like this, our trading's going to improve because you're going to think, okay, I'm taking this trade. I'm tying up capital with this trade. What's the business reason for me to take this trade? And when should I get out of the trade? If you think like that, you're going to be way more, I don't know, you're going to be way more on the ball, right? You're not just going to be off in some retail trader fantasy land, right? If you understand that when you're long, you're a merchant, right? Just like I bought 1,000 bananas, right? And if I don't sell those bananas, right, what happens? Well, the money I put into it is gone, right? So hopefully that helps you maintain some sort of practical perspective. Markets should be practical. This is not an easy business by any means. But if you maintain a practical outlook, it will help you in the business because then you won't have all these flights of fancy and you won't be going around looking at YouTube videos and talking about algorithms and running stops and all. You'll be thinking, how do I make money? Where do I put my buy order? Right? So where do you put your buy order? Right? Where do I insure the business transaction? Here. Okay? What is the reason for the trade? The reason for the trade is there's no supply under 57. So if I buy 58, right, and it breaks 57, the business reason for the trade does not exist. Therefore, I must exit with what capital I have left. If the business reason for the trade works, the market will rotate higher to find sellers at a higher price. I am a 58 long. I will sell at 60, 61. Before the sellers at 63 take my customers. When I talk about it that way, does it make sense? Can you visualize selling a product, buying a product, insuring that transaction, selling that product for profit? Can you visualize what happens when that product does not sell at the price that we hope to sell it at? And that's why I exit that business transaction. You should be able to visualize that because that's all it is. If you try and overcomplicate it any more than that, you're going to have a lifetime of blown up accounts. Every trade is based on two principles. If you're going long, it's based on the fact that there's no supply and you want to be a supplier. If you're going short, it's based on the fact that there's too much supply, right? And you are selling the market, you're selling next to the supplier, right? Where the suppliers are competing and lowering price, that's where you're shorting. You could see here they were lowering price. So you'd want to be shorting that move down. Price competition is why price goes lower amongst sellers, right? It's a very simple concepts. If you keep the concept simple, then your trading plan is going to be simple. Your trading plan is to find the bid and then work off of it. That's really all you do every day. Most of these traders, you'll see a lot of people on Twitter, they'll post a 3 or 4 page trading plan, and then later on they'll say, I didn't follow my plan. And I'm like, yeah, no kidding. You know, your plan was like War and Peace, right? It's like too long. How could you follow that when you're trying to execute, right? You got to keep it simple so you could execute. You could have your mind clear. So now what we're waiting for that overnight point of control, which is up at 59.79. It's around 1,300 contracts. We're waiting for that to drop down here somewhere. And that'll show that the inventory above is being sold out at a cheaper price. We can accumulate it and then take the market back up. Till then, the market will probably rotate around while it waits for all of these sellers to bail out, right? The trap is that people who short down here, right? If the market doesn't break that overnight low and you're shorting this area, once that point of control drops down and all the supply is underneath 63, the people who are short under 63 will help drive price back up. And you saw that yesterday. You see it every time overnight inventory is short and we're in an uptrend. The reason why overnight inventory is short is it because it allows those people who got caught short under 59.80, under 59.90, it allows them to come in and do some covering at nighttime when prices are not as high. It allows you to get a deal. Let's see what happens here. So small candles right now, nothing to do. All right, we wait for this or we wait for this. When you're right in the middle of a zone and the candles are getting smaller, you really don't want to trade that. Okay. Now, if you're a gun to the head trader who has to trade, right, and say you're thinking short, right, and you're shorting this 60 area, there's your warning sign, there's your stop. Okay. And conversely, if you're going long, there's your warning sign, there's your stop. That's if you have to trade. So every time you get into a trade, you should know your exit, right? It's like getting on a plane and not knowing where the exits are. Make sense? Okay. Anybody have any questions? Well, it's a little slow. Actually, it's very slow. No? Nobody's chatting? Jeez. How do you spot the seller? Right here, Howard. You anticipate that the seller is there. The top of that candle is what caused this move down. Okay? Do you see the top of this candle here? So when you get back up there, see how they're selling into it? That's how you spot it. See how simple it is? But remember what we talked about yesterday, how you have to sit and watch. You're not going to make observations like that if you're actually in a trade. Right? Those are observations that you make when you're not in a trade. And that's useful for when you are in a trade, then you'll actually know what's going on. That's why I keep harping about sitting and watching markets, and don't be patient, be smart, right? Smart people watch things, see how they work before they throw money around, right? That's how you that's how you gain knowledge. So you can capitalize on that knowledge and make money, right? But unfortunately in trading, because the price is moving around, people get sucked into that movement. And then when they get sucked into that movement, they abandon They're powers of observation, right? So when it's slow like this, right? I don't have to. I don't mean you don't have to sit and look at this for 6 hours. If you could just take 20 minutes of your time or 30 minutes of your time and observe, right? You're not going to make any money anyway, right? So instead of losing money, right? Spend some time and watch when the candles get to that level. If they can't even touch that level, that means there's somebody selling before that level. That's called front running. Then you look to see where they stop selling, where they take their foot off the selling, right? Now look, watch. You can see the tops of those candles are where the sellers are initiating, right? You see that, Howard? So that means if you were long here, that you'd want to sell here before they sell and push the price down, right? And those are observations you can only make when you're not stuck in a trade and you're worried about losing money, right? Let's face it, when the market's like this, 99% of you are going to lose money trading. So instead of losing money, take 20 minutes and observe, right? And when you're watching, don't be thinking, is this a good place for me to get into a trade? That's how people blow it, because they're always hunting and looking for a trade instead of actually taking in the information that's important. And the information is the space between that line and the bottom of those candles, right? That's what's important. But nobody tells you that's what's important. So when they get down to 59 and 3/4, they stop selling. Why is that? Because they can see buyers under 59.5, and they're going to make those buyers chase and push price up to 60, right? It's pretty simple. But when you don't look at it and you don't know what to look for, it all just looks like a bunch of random movement on a chart, but none of this is random. Because people don't go into business to randomly put money at risk. Right? I'm going to take $200 million and deploy it randomly, and maybe it works out, maybe it doesn't. It's not how the world works. Right? So now we have a rotation between 59.62 1/4 and 59.59 3/4, which means that's where the market makers and the wholesalers are doing business because it's very slow. Right? So they'll buy under 61, sell over 61. Right? And that's that two-sided trade. Wow, it's slow. It's really slow. Boy, oh boy. Any questions? What do you guys want to talk about? Nothing. Hopefully something happens in 3 minutes when London opens. Gosh. Busy listening? To who? I'm not saying anything. Oh, that's funny. So the one thing is when you see stuff like this going on, right? When you see it really slow, right? What should help you is when you see that kind of price action, your mind should just sort of relax and you should stop hunting for a trade. Like right now, you shouldn't be going, should I go long here? Should I go short here? Should I? That should not be going through your head. Your mind should instantly, instantly relax. That'll save your mental energy for when you actually need it to trade. That's another reason traders are so worn out from watching this, right? And they're like, it's funny. You talk to them and like, what do I do? But I have to trade. I have to trade. I have to trade. And they wear themselves out watching this. So when the real trade comes, you miss it. You know, happens all the time because you don't know when to focus your attention on what to focus your attention on. I hope this stuff makes sense to you guys, and I hope you use it in an intelligent manner. Right? We want trading to be about common sense. Oh, here we go. London's opening. Let's see if we can take out 62 and 3/4. There's a seller there, but it's not aggressive. There we go. Whoop, one tick. Come on. And they're back. Come on, let it breathe. The reason why that's happening, right? You guys call that a false breakout, is because there's too much selling competition, right? Now, when London opens, you get a sense of, hey, are they going to let it breathe? Well, they let it breathe for about 30 seconds. The point of control has not moved down yet. That's what we're waiting for, Raj. And it's around 1,400 contracts, and there's not even 1,000 down here yet. So it might take some time, right? The slower the market, the longer it takes to move price. Just like the slower it is in Walmart, the longer it takes to move 500 TVs, right? 3 a.m. in New York, and it seems like London did not wake up. So really no change. London opened, and we're still in that rotation. So nothing to get excited about, right? So when there's nothing to get excited about, you can really just your mind can kind of calm down. Now, this is hard for people who want to make a trade because they're like, you know what? I'm up at 3 in the morning, JJ, to watch this. Um, I can't just go back to sleep without making money, right? Now, if you're in that sort of in that mentality, that's how they get your money, right? When you're desperate, when you're angry, when you're frustrated, right? Let's talk a little bit about trading psychology since it's slow, right? I've got to fill the space with something, so let's try and make this useful for you guys, right? So let's see, it's going to come lower here. Let's see if it can come take out that low of K at 56 and 3/4, right? So let's use trading psychology in a practical way. Now, I actually, I'm a bit stupid. I have this belief that if you educate people, they won't make stupid mistakes, right? I have this belief, maybe that's naive, because I talked to a trading psychologist, one who gets paid a lot of money by hedge funds and a serious person. And she said to me, because I came up with this idea about, I go, how about we use trading psychology before people blow up their accounts, right? And she told me something and I was shocked. She goes, JJ, I don't think that's going to work. Right? Hey, Travis, one sec. I'll get to your question. So I want you guys to prove her wrong. Right? I believe that you guys are smarter than people give you credit for. And I think that if you understand how things work in a simple way, that you won't blow up accounts. And that you won't just run around like chickens with your heads cut off until you lose everything you have and then go get a trading psychologist. I don't know. Maybe it's too early in the morning to have this discussion. Exactly, Travis. That's normal. That's normal business, right? Buy cheap inventory and sell it. Definitely. That's definitely normal business, right? I don't know. What do you guys think? Do you think you guys are not getting enough credit? Or do you think it's a lost cause? Because I'll tell you one thing for damn sure. In any other kind of business, you can't run it that way. You can't go into business and say, I'm going to blow up the business and then I'll learn the business. Because you don't get chances like that. Looking to take out that 57. Let's see if we can. I mean, you can't do business like that in any other kind of business, right? I don't know. I don't have the answers. Right? I don't have the answers. Yeah, we couldn't take out 57, Jerry. Let's see if we still have sellers at 59 if you're long. What are we trying to prove? That you're smarter than everybody thinks, John. The professionals think that you guys are idiots. I'm holding out hope that you guys can actually learn. That's what we're trying to prove. Yeah, that's what she said. She goes, everybody has to learn the hard way. I don't know. But you can't run a business that way. Like if you worked at a bank, right? And you left the door to the vault open and people just were able to walk in there and take money out, you think you'd have a job? I don't know. If you ran a pizza parlor and you burnt every pizza, how long do you think you'd be in business? Right? If you were a doctor and you killed every patient, how long do you think you'd be in practice? I don't know. These things just don't make sense in the real world. But in trading, retail trading, there's this delusional aspect that you have to lose all this money before you can learn anything. I don't know. I don't have the answers. But I'm hoping that you guys will at least think about it. See how the sellers have moved down here? Howard, are you awake? Where are you? Look. You see how the sellers have moved from there to here? Look. See that? No, I didn't take any trades here because I was flapping my gums. It was so slow. Yeah, but John, how many times do you actually crash a plane and walk away from it? Right? All right, back up to 60. Right? That's okay. You've crashed a plane twice? Okay. And walked away from it? Damn. All you need is to see this, Howard. Good question, right? So you see there's a bid here and there's a bid there. And the bid's moving higher. You see? Just need one sometimes. And now we're up past 59. We're looking to see where they sell into it here. Just small, tiny little rotations, right? Anyway, I've just tried to figure out how I can help you guys. And I'll spend some time on it. And if I can't, then I'll just go back to selling you guys stock. That's a lot easier. Because you don't even know that you're buying it. go work with the Tilray guys. Do another deal, right? Uh, yeah, I don't know, John. I don't know. I'm trying to do a survey. What I'm trying to do is I'm trying to improve my teaching, right? That's all I'm trying to do. I'm trying to improve the way I teach, the way I communicate. Oh, creeping up on 62 and three quarters. Let's see. Oh, see, seller's still there. All right. Now let's see if we can clean that out. And if we can get over 62 and three quarters and stay above it this time, look for just under 64 and then 64 half. So now this is a sign to me, even though I didn't trade this, it's a sign that the market's starting to clean up. It shows the fact that we didn't have to sell under 57 this time like we did half an hour ago, an hour ago. That's telling me that they don't have to sell under 57. So the bid moved from here to here. Okay? The sellers are still there. Still there. Right? I'm just trying to learn from you guys. And hopefully that helps me teach in a more clear way that you guys can actually use to make money. Because there's so much trading education out there that's just, I don't know, just seems a bit useless. Whew. Still not enough volume to move the point of control down. Let's see if we have to. Hmm. Yeah, you're right, John. Very true. Very true. What's the most important thing to master to see success in trading consistently? Master is the power of focus. The most important thing to master is to focus, right? And to understand when to do business and when not to do business. It's hard to put it all together, right? You have to build step by step. Understand the basics, right? So what's a market about? A market is about taking stuff and selling it at a profit, right? The chart is a way to track the acquisition and sales of that inventory. So if you start looking at a chart as a sales chart, right? The inventory from above right now is being liquidated into wholesale hands here. And once that inventory from above is acquired, then it will be taken up and resold for profit. But what does that depend on? Depends on the flow of customers coming into that marketplace. So if that fails to happen, right? If that fails to happen, the inventory will be sold at a further discount. Just simple stuff like that. If you understand that, then the chart starts to take on meaning, right? There we go. We're finally cleaning it up, Travis. Let's see if that seller at 63 and 3/4 is still there, right? And you draw these lines, they just help you manage your expectations. So if you kind of look at the market profile, you'll see that this is the discount zone and this is the deep discount zone. So now, if we get above 64 and a half, the inventory will be below us. Right? And you buy a little bit. Remember, there's going to be sellers on the way up. So just make sure you put your sell orders out. And if it blows back underneath 64 and a half, then you know. See, it's going to come back down and test it. And if we've got all the inventory, then we should be able to hold 64 and a half. And the offer will start to lift. But if there's no buyers here, the market's going to come back down underneath to find those buyers. That's why I like to wait till it goes up, comes back, and comes back up over it again. That's why we like to look below and fail, right? Because it goes up and then it looks below that level. And when it fails and comes back up, it means that those sell orders that are going on here are completed. See? Oh, there's a seller at 65. How aggressive are they? Just watch the offer. The offer lifts, that means they've seen buyers, right? Very simple, right? Put your sell orders out if you're long, right? On that 64 half 60, you know, if you're long here, you know there's a seller there, so you know don't be looking for a huge win, but put some sell orders out. There you go, right? If you're long 64, 65, you sell into these 67s. There, flat, right? So we waited almost an hour, right? We finally got a trade off, right? Took one trade the entire hour. Once it got over 64 and a half, the inventory was underneath us. The trade is long. You buy a little bit, you sell a little bit, right? VWAP was up at 76 earlier. I think, let me just check and see if I have it in the same place or, oh my goodness, ready for a nap now. Oh, there it is. VWAP's at 73 and 3/4 there. Yeah, there we go, right? So there you go. And this is overnight inventory correcting upwards, right? Because inventory is short, the move is to the upside, right? The POC, we didn't have enough time to move the POC down, Howard. Didn't need to. I was long 64 and 3/4, 65, selling into the 67s and 68s. First trade of the day, John, a little slow. There's no trade to be taken at 69. At 60, I don't like to trade in the middle. I waited until we got over 64, and then it did a look below and fail of 64 half. You could have in retrospect, but I didn't see it at the time. Like I did not think about buying that, right? So what I did was I waited for this, took the trade, stop, and I sold into it. I like to trade from the edges. If it comes back down there, Jerry, you have to take a look at it. This white line here or this one? This is just the middle of the zone. And John, like we've discussed, right? We only trade from the edges. On a choppy, slow night, I prefer to trade from the edges. I don't trade in the middle. Remember, I trade from the outside in, not from the inside. From right, not from the inside out. I always trade from the outside back in. You've been, you haven't been like on a lot. You've been traveling, and so the more, now that you're back and that you're retired, you'll be able to spend more time. I'm just looking at this right here. Same thing. Look below 68 and a quarter. Fail, right? But there are sellers on the way up. So just remember when you do go long, put some sell orders out in a choppy market because you don't know where your price competition is going to be. You can only guess. And this will give you an area where to put your sell orders or where to front run your sell orders, right? So say you're long 68 half, 68 three quarters, right? You know there's going to be sellers here at 70 and three quarters, so sell a little bit, right? Yeah, and sometimes they're going to be tough, Travis. You're not going to take every trade. Sometimes I'm going to see something that you don't. Sometimes you're going to see something that I don't. That's just trading, right? Yeah, you gotta be, I hate using the word patient, but yeah, if you want to be smart, you got to be patient. It's really that simple. I find impatient people rarely make a lot of money. See, there's the seller. That move had better probability here because this is the beginning of the move. This is kind of where the move is sort of ending. Anyway, that's pretty much it for me, folks. Oh, that was a slow session. Thanks for being with me. Come visit us at the Trading Syndicate. If any of you are interested in one-on-one coaching, please reach out. I'd be happy to do a phone call with you to discuss your trading needs if you're serious about taking your trading to the next level. And my mentoring program is a lifetime mentoring program, so it's not like I teach you for a couple of weeks and disappear. We work with you for as long as it takes. Thanks, everyone. Be good out there. Ooh, look, now it's working. You'd be looking for VWAP. Thank you so much. Have a great morning, and we'll see you in RTH. Bye for now.